This is the key focus at the moment, coronavirus, the second wave. We're seeing huge cases in the United States, here at home as well now, and increasing cases. How is this playing out for the commodity space, in particular oil, which of course we still need to see the demand side pick up there, but it looks like this could at least be an obstacle.
Well, good morning, Ingrid, Daniel. If you're looking at oil over the last matter of, say, 8 or 9 hours, we've seen it fairly heavily sold off. We're down $2 on WTI. So you're down at that 37.50 sort of level. Now, I wouldn't be surprised to see a little bit further softness leading into this week. There's some big data points as far as NFP coming out on Thursday, non-farm payrolls, and general softness, I think, across the equity side. So I think that'll drag crude lower, and I think it's going to be a tough week to be bullish for crude.
It feels like we're going to get 5 trade moving days for the price of 4 this week, Peter. It might be a shortened week, but we've already seen that huge sell-off on Friday. It looks like that's going to accelerate into our Monday morning session here. Is it going to be a grim outlook for the week at large at the economy?
I think it will. We take a big lead from the US, Daniel, and naturally that's going to flow into Asia trade today. I think it's going to be softer. Just depends on how deep this particular route and how long it takes to we come out the other side. So we've got increasing numbers, as you've just said in all of your headlines there across the US. It's certainly worrying the president and the vice president and all of the governors. So how deep we go, let's look at the Thursday's numbers, non-farm payrolls, possibly 3 million, but it still makes a headline of about 12.2% unemployed.
What else are you watching? I mean, when you look at certain, I've got to mention the figures out of China over the weekend, industrial profits increasing, and it was quite a significant increase. Yep. I guess, Peter, how do you play or balance that data out with what's going on in the iron ore market and what you're expecting this week?
Well, you're looking at that demand picture, Ingrid. It hasn't really waned at all. They're record numbers. As we've said repeatedly, unfortunately, the situation in Brazil is dire, so it plays very favourably for our exporters in the iron ore sector. We just think it's going to be a very strong winter season. There's no real hiccup there, so it's going to, I think, continue to be very good numbers. The other side, of course, is that overall demand picture, and China is booming in a lot of ways. I mean, it forced those lockdowns, and it's been very strong recovery. So that may be, hopefully that's going to be the sentiment that washes across the world, but I'm not really sure of it. Many central bankers want to try and emulate it, but with the COVID numbers the way they are, I think it's going to be a very tough next couple of months.
So is it really a case this week of these COVID increasing numbers around the world, especially in the US? Is that going to be measured, potentially contrasted by potentially good PMI numbers to come out of China? Will they net each other off, or will there really be a balance in one direction as we look to sentiment this week?
I think I'm not sure whether they'll net each other off. I feel as though that those numbers seem to be, dragging it down, those US coronavirus numbers. So I feel as though that you'll probably see continued softness across the equities. We just don't know how heavily they'll impact the markets, Daniel. And if time will tell. We've had such a dramatic run up in April and May. We're all conscious of that. We put June behind us at the end of mid this week, and we roll into July. And I think July is going to be very much an awakeness and to see where we actually go as far as, the recovery phase. So it could be quite a dire month from an equity standpoint.
So, I mean, what else are you watching? If we do see sort of a come-off in markets, a fall in markets around the globe, and we see sort of these fears take hold for investors around a second wave of infections, are there any commodities that you see perhaps outperforming off the back of this, Peter?
Absolutely, Ingrid. It starts with G and ends with D.
Yeah, I was going to say.
It's hit 1790 in the last couple of hours as far as trade. We'll be touching, I think we'll break through 1800 by this month, and there we are on the 29th. So I'd say by tomorrow, I wouldn't be surprised to see an 1801, 1802 handle.
How much further can it go, Peter? Because it just seems, as I've been saying for a few weeks now, it's got so many tailwinds. It seems everything's pointing on the up for gold. Can it just keep going higher from here?
I think so many analysts, are looking at that 2,000 number by the end of this year, and I think it's quite conceivable, considering where it was a year and a bit ago. We're up about 32, 33%. So it's dramatic uplift, and we all understand the big picture. So many traders are looking at it. I think that a lot of that risk money has been looked at, the crude market, and they're seeing it now, fairly much range bound, but gold's been a standout from the retail sector, and I think everyone's enjoying the uplift.
I'm glad you've spelled it out for us there, Peter. Some of us would have been going away like me trying to put these letters together, but really appreciate your take this morning to the start of the trading week.
Thank you, Daniel. Thank you, Ingrid. All the best for the week ahead.